Now, let us quickly move to the third session, which is going to be a very engaging one. It is going to be taken by CA Rajat Mohan ji. He is going to talk about the issues related to valuation and the time of supply. To introduce CA Rajat Mohan ji, he is a senior partner at AMRG Consultants. He has authored more than half a dozen of books in indirect taxation, GST being his forte with renowned publishers. He has been authoring book in GST since a decade now. He has worked on GST implementation and transition for various multinational corporations and big Indian business houses. He has conducted workshops and trainings for more than 6,000 professionals and corporates. His core strength is his ability to assist in GST implementation. His current client portfolio covers all the major sectors of the economy, which includes infrastructure sector, e-commerce industry, manufacturing sector, travel and tourism, oil and gas, education, banking, IT services, and financial services. Without taking much of time, I did a real quick introduction. Over to you, Rajat sir, for your topic, sir. Over to you.
Thank you, Shubham. Thank you so much, and a great presentation by all the co-panelists. So we are already running short, so I'll not have a long thank you to all the co-panelists. So 30 minutes have been given to me to discuss several issues with regard to valuation and time of supply. So I'll stick to that timeline and try and finish within the period of 30 minutes. So I have picked up, so instead of going topic wise, I am trying to go some industry wise. So I will be covering few industries per se, online gaming sector, something, the issues which may which may exist due to COVID era, pure agent, jewelry industry, resident welfare association, and infrastructure industries. So I will be covering one issue each from all these industries. So online gaming sector, the biggest issue is, so if anyone is from online gaming sector, the problem is on what value should GST be charged. So under section 15, the GST needs to be charged on the value or the transaction value which is paid or payable for a particular supply of goods or services. Rule 31A states that in case of lottery, betting, gambling, and horse racing, the GST needs to be charged on the total amount or the face value of the bet or the amount paid in the totalizer. So basically it means if you and me are playing a game whereby we are gambling 100 rupees each, and you win or I win, so GST needs to be charged on the entire value of 200 rupees, irrespective of the fact that the company who is arranging a platform for both of us to play is charging only a small fees of 20 rupees. Thereby, if I charge 18% GST on 200 rupees, it will be 36, much more than the value of the services rendered by the platform itself. So this is one of the biggest challenge that exists. In GST regime, there is a very recent judgment of 2021 with regard to Bangalore turf, which for the first time said that these provisions of 31A saying that 100% tax at the rate of 18 or 28% needs to be charged on the 100% of the value of the bet is incorrect and ultra virus the provisions. So this is one of the issues. In linking the same issue is, there are certain investigations that have been initiated in pre-GST regime as well as in the GST regime, whereby it is being said that if I go to an online website and deposit certain amount in their wallet, then that wallet initial deposit would be chargeable to GST. So if I go and want to buy something at Amazon, I deposit certain amount in wallet, that is not chargeable to GST. It's very clear. But if I go to an online gaming company and I deposit certain amount, can GST be charged on that? So this is the question. This is the problem that industry is also fiddling with. So I believe this is not chargeable to GST, and practically none of the companies are paying this GST, even though scrutinies and assessments or maybe investigations have initiated against such companies majorly in Goa and Maharashtra. So 5 reasons no GST is charged on this initial deposit. First of all, there is no supply. When I deposit some money, there is no supply. Second, it's a mere monetary transaction. Third, because there is no supply, there is no goods and services, there is no consideration also. If there is no service, no supply, it cannot be treated as an advance against a service. And the last reason, fifth, is under GST law, actionable claims are not chargeable to tax unless and until they belong to lottery, betting, and gambling. And of course, lottery, betting, and gambling. This is not depositing a money in the wallet of an online gaming company. Is neither lottery nor betting or non-gambling. So these are the 5 reasons for which I believe this initial deposit should not be chargeable to tax. So these are the detailed, I have given why, just to, if you have missed out something, I'll not be going in very detail and reading those things. So there is a judgment by the name of Gurdeep Singh, famously known as Dream 11 judgment. In GST regime itself, Bombay High Court categorically said if there is any amount deposited by the players in an escrow account, it is to be treated as an actionable claim, and it will not be chargeable to GST. So this is a big relief to all these online gaming companies and other horse racing and other companies. But the problem was, in this judgment it was written that the amount needs to be deposited in an escrow account. So now the practical problem with regard to industry is the newer companies. I'm not saying companies as big as Dream 11, but the smaller companies that has come up in last 1 or 2 years. Practically banks are not permitting them legally to open an escrow account. So this judgment, somehow tax officers are of the view that as you are not able to open an escrow account, the judgment is not applicable, and thereby for any initial deposit being given by your players, it will be chargeable to GST. So the position according to me remains same, that it will not be chargeable to GST because of the 5 things that we have already discussed. So now the problem persists in these 3-4 industries. 38 GST Council meeting, they have discussed what practically and legally should be the valuation mechanism. Should we, the rule 31A says 100% of the bet value. But this 38 GST Council meeting, they were discussing a lot of stuff, and they said in case of three industries: casinos, horse racing, and online gaming, the GST shall be charged on the value that is retained by such taxpayer after paying out the winnings, meaning thereby the net retention amount, the net value added, also known as platform fees, also known as savings, also known as profits per game. I'm not saying profit for the month or profit for the year. I'm saying profit per game is what the council meeting is contemplating that should be charged to GST. Nothing has been decided as yet. Rule 31A has not been changed. So the problem exists. Of course, on 24th May 2021, because the council was not able to take a decision, so three states are running forefront in this: Maharashtra, Gujarat, and Goa. And so for these 3 casinos, resources online, a separate GM has been formulated, whereby prima facie they will look into the valuation mechanism and tell you, whether this GST needs to be charged on the 100% of the bet value, or a mechanism of deemed valuation like 30% in infra should be taken up. Guys, I believe you must be having a lot of questions on this. If you have, please punch it in the chat box so that at the last each individual people can just go back and reply. So COVID era, what happened, and a couple of practical issues which were raised to me by my clients. I have incorporated those 2 slides. So first of all, in trading and manufacturing, what happened, if in case, in one of my cases, the person has sold huge material to a lot of clients, and this is the case of March, April, May 2020, when the lockdown was imposed. No one was paying. So they said, because the goods have gone and we will not be able to sell for a very long time, thereby we want a deep discount of 70% or 80%, 90%. So they don't only want the discount on the value of the goods, but they also want a discount or a rebate with regard to GST that we have already collected 18%, 28%, 12 or 5. So they also want an adjustment with regard to that GST. So the problem for my client, a taxpayer or the supplier, was, if I give a rebate or if I give a discount with regard to GST value, will I get an adjustment for the same from GST department? So this was a question that was posed to us. So technically speaking, with regard to procedural law and with regard to GST, and it was very simple to raise a credit note and the adjustment would be made, as it is a case of self-assessment, and many people have done that. but our view is little different with regard to the provisions in the law. Section 15 says that value of supply shall not include discount if two conditions are fulfilled. First condition is such discount must be established in terms of the agreement. And the second one is the recipient shall reverse the input tax credit. The second one, you can, get that reversed. There is no problem. The problem was with regard to the first one, whereby such discount should have been established in terms of the agreement. And for this, the COVID was something very new, very novel. None of the governments ever knew. None of the governments and the astrologers ever expected that we will be hit by COVID and there will be worldwide lockdowns. So practically speaking, none of the corporates, not even the biggest of the biggest corporate, have any relevance with regard to uh, any provision with regard to giving a discount on account of any force measure or any pandemic or something like that. I have not seen that kind of a clause. So when the clause does not exist, you will not be able to get benefit of GST on that additional value of discount given. A. B. A couple of people came to me after giving that opinion that your opinion is wrong, and I will tell you the way out. The way out was to issue a supplementary contract, because it's very easy legally to enter wide contract this in 2020, referring the original contract of maybe 1970s. I incorporate particular clause with regard to pandemic, and I say now it is established in terms of the contract. But if we read the line carefully, my law says it should be established in terms of the agreement entered on or before the date of supply, meaning thereby the moment you have entered that supply in February, January, whenever it was, the contract, the agreement should exist in that form, incorporating that clause, meaning thereby addendums, supplementary agreements, letters, waivers, etc. will not help you at all. And up till now, we are still not out of the pandemic wholly, but I believe this will be very, very big litigation area, because every person has given a discount during this period and taken an adjustment of GST. So this was the second point. And the third, the way out, the problem was, why do people want an adjustment of GST? Because they believe they will not be able to get an input tax credit. There are plethora of rulings available now. Earlier it was disallowed. Now there is a famous judgment of MRF triple AR judgment Tamil Nadu, which said even if there is a reduction in value of goods, if GST has been paid, then the person will get a full credit, full ITC of the GST. There is no problem. So please, 90% of the things have already happened, but I believe these GST benefit for discount shall not have been given. We should refrain, especially in the COVID period, because every tax officer knows that this was something different, and he will have a say in the scrutiny of this period. So just be careful, and if you have to take a decision, it's better that you give a financial credit note, reduce the value, but don't reduce the GST. Tell your recipient that they will be easily able to take the GST credit, and there are plethora of rulings with regard to this from AR of various states. Guys, moving forward, yep, this is the second issue which has came in. One of the, so again, a practical issue. One of the persons who is supplying the 100% of the garments to a particular industry, a particular client, one client, 100%, maybe 200 crores of supply, only one client he has. So the moment the lockdown was imposed, this guy has manufactured a lot of goods. His stock would be somewhere around 20-30 crores in stock, because he used to supply on just-in-time basis. So the moment lockdown was imposed, this company said we will take a 90% discount on these products, and we will just give you 10 rupees, or we'll give you just 10%. Now the point is, something has not been supplied as yet. Invoice has not been raised as yet. I am not getting my full value. I'm just getting 10% of the total value. On what value GST should be paid? Whether GST should be paid on the 100 rupees, which is the normal price which I usually get, or GST should be paid at the discounted value, which is 10 rupees. Of course, my section 15 says that transaction value GST should be paid, which is 10 rupees. But uh, uh, client raised me that there is a famous judgment of a fiat by Supreme Court which said, in case the goods are supplied below cost, then the tax needs to be paid at cost itself. So that judgment is there, but I believe the provision itself was amended in the previous erstwhile law only, and that judgment is no more applicable in even in the erstwhile case. And this is the proof is this Nanak refrigeration by Supreme Court itself in 2003, whereby they said selling price will be accepted as an assessable value even if it is below manufacturing cost. So do no need to worry. Fiat ruling would not per se apply the GST regime if you have not raised an invoice, you have not supplied something, and your client wants even a 90% or 80% discount. There is not of a big issue. Third thing, I have faced a similar kind of a DGGI in the state of Uttar Pradesh, our great state of Uttar Pradesh in the Noida region itself, whereby these 20, 30 tax officers were sitting in my uh, client's premises. So not even exactly my client, but this case was referred to me at 11 p.m. in the night. And I went to this place. This 20, 30 people said that, you have sold the product at a huge discount because it was a scrap. It was a scrap of a tire. So he bought the tire for 100 rupees. And because the whole consignment was bad, he was required to sell the consignment at 10 rupees at, after 90% discount. So tax officers were after his life that, there is a tax demand of 6 crore rupees on, they've computed on the fictitious figure of 90% discount that has been given. So just by quoting couple of rulings at 11 p.m. at night, within 10-15 minutes, the entire unit, reduced from 20 people to 5 people, saying that we accepted what you said and there is no problem. So the problem is if you have not supplied, GST would be charged on the value, transaction value. So guys, moving up to the next thing, pure agent. There are many people who say GST needs to be charged on the gross value, which I agree. Is there any way out that if we are not making a profit, if there is no benefit to us, can we reduce that from the GST? So one way out is Rule 33, which states that if any supplier is supplying something to a recipient as a pure agent of the recipient, then the value of such supply shall be excluded from the value if there are three conditions to be satisfied. First, he is acting on the authorization of the recipient. Second, the said amount is separately indicated. And the third, he is rendering his service separately and the out-of-pocket expenses are claimed separately. I cannot practically call it out-of-pocket expenses, but just to understand, if I am a chartered accountant, I am charging you 10,000 rupees for filing your income tax return, then GST will be charged on 10,000 rupees being your income tax return. If I also pay your income tax, which is probably 5 lakh rupees, then GST, and I pay to the government and I recover that 5 lakh rupees, I will not be paying GST on 5 lakh rupees because of these three conditions that I have satisfied, which is authorization. You have authorized me. I am separately indicating it in the invoice, and this is something in addition to my own services. So this is Rule 33, which was put to a use a lot in the pre-GST regime, but I have not seen a lot of clients using it in the GST regime. Maybe just because either ITC is available or they are a little more careful about this. So yes, Rule 33 exists in the GST regime, and you can make use of this. So going on those lines, there is a good ruling of this 2021 ruling of Kerala, whereby there is this company who is teaching the students in some medical coding, exam of which is to be held at US. So every student is required to go to US and pay the examination fees. What this company is doing is this company is paying an examination fee on behalf of the students and recovering the same from the students. So AR said that the recovery of examination fee on the for the students is not chargeable to GST because you are acting as a pure agent. So this is only one part of it. The second part is very, very important. There are two kinds of students. First is a student that were studying in that coaching classes, and then they were paying the examination fees, which was in addition. Another leg of the students were that have not taken the classes from this coaching institute, but is doing a self-study, and they go to the institute only to get their fees in abroad paid, for which this institution is not charging even a single penny. They are just doing it for the benefit of the students. So in the second case also, the authority said it will not be chargeable to GST, because not because of the pure agent concept, but because they said because agency is not charging any consideration, because in a GST there has to be a supply. For every supply there has to be a consideration. If there is no consideration, there is no supply. So in this case, they said because they are not charging anything for their own services, there is no services rendered by them. It's a mere, probably a monetary transaction. They take a money and they pay a money. So there is no consideration. Because there is no consideration, there is no supply. If there is no supply, there is no GST. This kind of rulings are again beneficial and can be used. So coming to my, I suppose, a third topic, we have 10 minutes to go. Gems and jewelry industry. So gems and jewelry industry, what happens? So this is the biggest, the issue with regard to gems and jewelry industry. What does the industry does? It's very common for the industry to purchase an old jewelry from an individual, just clean it up and then sell it off to another individual. Practically speaking, in all these cases, these companies are levying GST on the gross value, on the value for which they are selling the second time. Whereas there is a provision 32 which says that in case you are dealing in any buying and selling of second-hand goods, then GST would be paid only on the margin. That is the difference, selling price and purchase price. For example, I purchase certain jewelry from you for 1 lakh rupees, and after cleaning the same, I have sold that jewelry for 1 lakh 10,000. So now Rule 32 says GST will not be paid on 1 lakh 10,000. GST will be paid only on the margin or only on the profit that I make, which is 10,000 rupees. So there with regard to this provision, there was a lot of confusion in the industry, because I have worked with a couple of gems and jewelry clients. So I know what has happened, where has happened, and what was the position of the tax officers. Tax officers always said that we'll recover the tax on the full value, not on the margins. But now a couple of rulings have came in 2021 itself. One ruling has came by Karnataka AR, which said that GST will be charged only on the margins and not on the gross value, best because of two reasons. First of all, there is no, the jewelry that has been purchased has been sold as such only after cleaning. There is no melting of jewelry that has happened. Secondly, no input tax credit has been taken by the supplier. Thereby, because of these two reasons, the tax will be paid only by the margin. So this is one of the rulings. There are other rulings also by Maharashtra Triple AR and Karnataka Double AR in Artica Gold and Safest agencies. So I believe this is high time, and the industry can now very safely and securely go back to the margin scheme. I have met couple of officers. They always said this provision of Rule 32 is not for the jewelers who are a luxurious thing. They are primarily to be used by, what they say, newspaper wala ya raddi wala only. This was the intention of the law. The point is, we are not concerned about the intention of the law. Once it is given in black and white, it is available to every industry. There is no embargo in Rule 32 or any circular or some saying that it is not applicable to gems and jewelry industries. So it's very clear that industry, it's high time, should now focus on and try get this benefit for themselves. This will save a huge tax for the final consumer. Resident Welfare Association, yes. One point with regard to the chargeability of tax on such association has been covered by our leader Rajendra Arora ji. So I would be covering another part of it, whereby there is a provision that all the resident welfare association with regard to maintenance charges, there is a clause under notification 12/2017 which stipulates that if you charge maintenance charges to the extent of 7,500 per month per member, then there will be no GST on it. Now the problem is, so this clause has been written, what if the maintenance charges are more than 7,500? So numerous AR rulings have been given, circular has been given, which stipulates that very basic reading of the language of the provision says that the exemption is available only when the amount recovered is up to 7,500 per month per member. If the recovery goes 75 and beyond 7,500, then this exemption is no more applicable. Thereby, the full amount will be chargeable to tax. So if I charge 7,400, there will be no GST on it. If I charge 7,600, then the GST would be charged on 7,600 and not on the difference between the two. So this is the problem, because of which the person went to first AR. AR in the case of green owner said that yes, GST would be charged on the entire value if you are charging more than 7,500. The case went to Honorable Madras High Court, said Madras High Court, and Honorable Madras High Court very categorically said, what is this done? This is a entirely incorrect interpretation of the law. The word up to says that up to 7,500 says the up to 7,500 has to be exempt. If someone is charging 7,600, up to 7,500 is exempt, then what is the taxable value? The taxable value has to be the difference only, because up to 7,500 was exempt. Thereby, Madras High Court said that the circular is void ab initio and GST needs to be charged only the balance amount. So the importance of this ruling would be to all the resident welfare associations, especially in tier 1 cities, Bombay, Delhi, Chennai, Bangalore. And if a good tax position has been taken by all of them, then this could save at least 1350 rupees per month for every household, every member of the society. So associations need to go back. So the easiest way out is to continue paying GST on the gross value of 7,500. This tax pay karna bahut aasan hai. The point will be take a position whereby GST is deposited only on the balancing figure. This could save a huge amount for a lot of people. So I suppose we are down to our last topic, and I would be completing within time. Infrastructure industry, yeah, this is pretty close to my heart. So what happens, so I'll just take 5 minutes on this. What happens in this industry? Work, so I'm giving you a situation. Work is completed in post GST regime because the contracts are very long. So let us suppose I'm constructing a metro project, I'm constructing a road project, I'm constructing a dam project. The construction is completed in the post GST regime. No problem. If the construction is completed in the post GST regime, money is coming to me in the post GST regime, I need to deposit GST itself. There is no such problem. Coming before that, if the work is completed in pre GST regime, my work has been already completed way back in 2010, 5, 4, 6. Now these companies go into arbitration, and this arbitration continues for 10 long years, for 20 long years. And the money is practically coming in GST regime. What will happen? Because GST has a provision with regard to reduction of GST TDS. Once GST TDS is deducted, me as a supplier, I am expected to pay GST. So if your work has been completed in pre-GST regime, you will have two options. So this entire presentation is very practical. I am not taken, the provisions 19, 142, etc., etc. I'm just hitting the bullseye with what my industry wants. So if the project has been completed in pre-GST regime, there are two options. First option is pay GST, don't pay VAT. Second option, pay VAT, don't pay GST. They're the prima facie two options. Very easy, nothing fancy about it. Problem, if you pay GST, you will be paying as per the current rate, which is usually 12% to 18%, very high. If you pay VAT in the previous regime, generally it has been seen that service tax was exempt. Generally, I am saying. VAT was chargeable, and that too at a very lower rate of tax, 3%, 4%, 5%. So these companies are more inclined towards paying of VAT. However, the problem is, my dear friend, with payment of VAT, you will have to pay interest also for 10 long years or 15 long years. They'll also impose a penalty on you for non-payment of taxes. So be very cautious about it. So first of all, you'll have to take two positions, whether you want to pay GST or you want to pay VAT. Both are possible. I am fighting both the cases, and in both the cases, I have taken different positions. So both are possible. So couple of points. If you want to pay GST, if you don't want to pay GST and you want to go back and pay VAT, so 5 to 7 conditions is what you have to tell to your client, or you have to see as a corporate, that in the previous regime, the taxpayer should have supplied goods or services, which is your case because work has been completed. Second, the turnover should have been reported under VAT regimes and service tax regime. Many of Many of our cases, no turnover has been reported. Third, the turnover should have been reported in the financial statements in the pre-GST in those years itself. The said amount should be shown as recoverable from the client in those years. It is not. The taxpayer should have issued an invoice. You must have an invoice copy in the pre-GST regime. Recipient should not deduct GST TDS, and no invoice shall be issued in GST regime by the taxpayer. So guys, these are the 7 conditions. If you fulfill all 7 conditions, the risk is zero. You don't need to pay any GST. You just have to, you will be liable to pay taxes as per pre-GST regime, right? So there are companies who say we are not able to fulfill all the 7, but we are able to fulfill 4, we are able to fulfill 5. So then it becomes your call as a tax practitioner or as a consultant. What do you want to opt for? But prima facie, I have listed all the conditions that came to my mind. And this is just based on the experience, nothing written in law with regard to these 7 conditions. So guys, this is it. This was my deliberation with regard to it. I thank you everyone for